You probably know that automating your finances can save you a lot of time, a lot of energy, and a lot of money. This is fake money, don't worry. If it was real, I wouldn't be here right now. But the thing is, for a lot of people, it's hard to even find the time to set up your automations in the first place, to set up your money management system. For some of you, you might not even have a clue what I'm talking about right now. But all you know is that you want to be more efficient in managing your finances. You want to get organized. You want to spend less time and less energy working on your finances while still building wealth. Well, the bright side with money management systems and specifically automations is that once you take the time to set things up, the ROI, the return on investment of your time, is usually high. Meaning, if you incorporate efficiency into how you manage your money right now, then you're going to free up time, energy, and money in the long term. So in this video, I am going to cover 5 ways that you can effectively automate your finances for the long term. For each of these automation techniques that I'm going to cover, I'm going to talk about what it is conceptually, why it's effective, what stops people from incorporating this technique, and how you can incorporate this automation into your finances. And because I care about your success, I'm not going to let you just walk off with only those 5 methods. But if you stick to the end of the video, I'm going to give you my bonus tip and tell you how automation helped me save my first emergency fund of over $10,000 in less than a year. For those new to my channel, hello and welcome. My name is Lissa Prudencio. I'm an accredited financial counselor, a personal finance expert, the founder of Wealth for Women of Color, and I am now the co-host of a brand new podcast called Net Podcast. My goal in everything I do is to help make building wealth more accessible to all of you. All right, let's jump into it. Here are 5 effective ways to automate your finances. Number 1. Automate your savings, aka pay yourself first. The concept: anytime money comes your way, you're gonna pay future you before you pay any other person or any other bill. It's like a deduction from your paycheck, like you would pay taxes or like you would put money into your 401k, but this is an additional bucket for future you. Here's why this method is effective. It makes sure that we don't get in our own way in terms of building wealth and planning for the future. Like a lot of people say, well, let me pay all my bills and I'll see what I have extra and I'll move that to savings. What this method does is it helps save you from yourself. A lot can happen between now and the end of the month to see how much money you have left over, right? You might accidentally spend it. And even if you don't end up spending it and you have extra money to put in your savings, that's going to take extra effort. That's extra steps to go log into your bank account, set up the transfer, and then move it. From a psychological perspective, when you do it this way, when you pay yourself first and it's out of sight, out of mind, you basically come to accept that future you is just as important as all of these other deductions and all of these other things and people that you typically pay first. What stops people from paying themselves first? Often it's either just a logistical thing, like they've never set it up, or not knowing their cash flow. Because if you don't know whether or not you have enough money to sustain this savings rate, it's going to be hard to feel comfortable doing it. So here's how to incorporate paying yourself first. Number 1, it all starts with calculating your cash flow. You have to know what money comes in and what money goes out on a monthly basis to know how much you typically have extra. Lucky for you, I have a free spreadsheet template for this, so I'll drop the link in the description below. Number 2, you want to review what the cash flow tells you, how much extra you have every month. Then you're going to divide that number by how often you get paid. This works best for people who have a regular income, but there are ways to do it even if your income changes from month to month. Once you know how much money can safely come out of each paycheck, you're going to set up a direct deposit at your job that goes straight into a savings account, preferably a high yield savings account, or you can set up an automatic transfer. The goal is to not let your money touch your day-to-day spending account, your checking account, and just go straight into savings. You're paying yourself first. All right, moving right along. Number 2, automate your recurring bills. So the concept here. you are going to make sure you're never late on paying a bill, specifically bills that are necessities. Your lights will stay on, your services are going to continue uninterrupted, and in some cases, you prevent damage to your credit by making sure that all of these bills are paid on time. Here's why it's effective to pay bills automatically. Most people are busy. You got work, you got school, you got family, you got kids, you got hobbies, you got a whole bunch of other things. When you automate bills, especially ones that are already going to happen, ones that you're already planning to pay every month, then you're making your life easier by automating these payments. What stops people from doing this is typically not having enough money or a financial cushion to feel safe about doing it, right? If you don't have enough money in your bank account all the time, it could cause stress because you think you're going to overdraw your account by automating these bills. So let me validate that. That is a smart way to go, right? You might not be ready to automate. But let's talk about how you can work towards automating your bill payments. So similar to the first item on this list when I was talking about paying yourself first, you want to know your current cash flow. Understanding your financial picture, money that comes in versus money that goes out every month, that's going to give you the information you need to know whether or not you can pay your bills in an automated fashion. On top of that, build in a cushion into your day-to-day spending account so that there is a barrier between zero and the money that you do spend on bills. You just want a little bit of an extra cushion to make sure that you never overdraw on the account. All right, moving on to number 3 on these automation techniques, and that is to automate the minimum payment on your credit card payments. So the concept is you set up an automatic payment so that anytime your statement closes on your credit card and they tell you, hey, here's what you owe and here's the minimum you have to pay to stay in good standing, what you're going to do is set up an automation to make sure that that minimum payment always gets paid. You're going to connect your bank account or payment method, and that is going to make sure that it is paid. What this does is it makes sure that you never miss a credit card payment, because missing a credit card payment can negatively impact your credit in a big way. Now, keep in mind, I'm not telling you that you should only pay the minimum. What I'm telling you is you are basically putting a guardrail in place. You are making sure that if all else fails, if you forget to check your credit card account in a given month, you at least have paid the minimum. Now, you should strive to never carry a balance from month to month on your credit card because nobody wants to be paying interest like that. But the reality is that's just not the case for some people. While you are working to get out of debt and while you're working to pay off your credit cards, you can still use this technique to make sure that you never miss the minimum payment. Then what you're going to do later on, for those of you who do pay your balance in full, is you're going to go in there and make an additional payment to cover the rest of the balance. So why is this effective? Well, the goal here is to help you maintain solid credit without having to think about it and making sure that you pay those minimum payments at minimum. That's what it is, minimum payment, then you're going to maintain that good status with that credit card company. So what stops people from doing this is similar to what we have with automated bill payments. If your bank account is always tight, it's gonna feel like you can't do this automation, because if you do, you might just overdraw your account and get an overdraft fee. So here is how you can build the confidence and the financial picture to be able to automate your credit card payment, at least for the minimum amount. First and foremost, you are going to make sure that any spending you do on a credit card is with money you already have. If this is not the case, if life is just that tight for you, then you're going to have to figure out other things like making more income. Now, another thing to be mindful of is in order to set up these automatic payments on your credit card, you have to connect a bank account. And I know some people have multiple bank accounts, so they're kind of spread out real thin and maybe don't have a big amount in any of these accounts. So if that's the case for you, you want to make sure that whichever account you're going to use for this automated payment has a cushion of money. And if that means consolidating a couple of your checking accounts, then so be it. All right, quick intermission before we hit on the last 2 items on the list. And also the bonus tip, don't forget about that. If you're enjoying this video, please subscribe and hit the like button. And if you really want to help out my channel, then please share the video with a friend. I really appreciate it, and just, thank you for all of the continued support. I really appreciate it from all of you. All right, moving on. Technique number 4, utilize alerts on your accounts. The concept, you are, again, setting up guardrails by enabling notifications on your financial accounts. It depends on what's offered to you through the account, but most accounts, especially bank accounts, will have some type of notification system. For example, you can set up a low balance alert with your bank. What this means is you set an amount. If your balance ever falls under that amount, they're going to notify you. They're going to email you, they're going to text you. This is effective because utilizing alerts can give you peace of mind anytime you're not looking directly at your account. You're going to gain confidence about not checking your bank account so often because you know in the back of your head that if something were to go wrong and you were to dip below a certain amount, you will know about it. So what stops people from using this automation technique? Well, usually it's just laziness. So for most people, just go into your account, see what alerts you can set up, see what works for you, and turn them on. Another thing is some people don't like getting emails and texts. And I feel you. We get so many notifications on our phone on a daily basis. But my argument here is this is your finances. Your financial life affects almost every other part of your life. So check out what you can turn on for your benefit, and this will save you a lot of time because you'll find yourself not having to check your bank account so often. So if you are ready to do this automation technique, here's how to do it. Log into your account, so let's say your bank account, and go to your settings, and there should be something listed as account alerts or notifications or something of that nature. Pick the ones that you want to turn on that will help you become more efficient in your finances. Now, quick reminder, watch out for scams, but this goes for basically all financial related things. Phishing scams always happen, so there are fake texts, fake emails that come your way where people are asking for your banking information or something like that. So if you were ever to get an alert like, hey, you got a low balance, then definitely don't click any link in the text or email, and don't freak out. Just go to where you usually check your accounts, whether that's an app or you type the URL directly into your browser. Make sure you are choosing to go there as opposed to some random ass link that you just got texted, and then double check, see if there actually is a low balance. Final automation technique on the list, number 5, but don't forget, I'm going to tell you how I saved $10,000 in less than a year if you stick around after this tip. All right, number 5, last method on the list to automate your finances is automated investing, specifically with a recurring transfer. So the concept is similar to number 1, where you're saving and investing by paying yourself first. Anytime you get money, you are paying future you first. Only the difference with this one and number 1 on the list is instead of putting money towards savings like a savings account, you are going to be putting this money into investments. Here's why it's effective. It's the same concept where you're setting it and forgetting it, and it's not very different from contributing to a retirement account like a 401k that comes directly from your paycheck. The thing is, if you make investing a habit that ends up requiring a little effort, then you're more likely to continuously do it, and then all of a sudden in the future, you're gonna realize you've grown your portfolio. A couple things usually stop people from automated investing, and that is number 1, understanding investing in the first place, so not understanding it. Number 2, not being comfortable with investing on a regular basis because, you want to use your money for other things. And number 3, related to that, just not feeling like you have enough to invest, especially if money is just tight all the time. So here's how you can work towards automated investing if you don't feel ready yet. Number 1, definitely learn about investing. You have to learn how it works generally so that you understand the risks in putting your money in investments. You can also look up how to work with a financial advisor, how to use a robo-advisor, or how to use some other automated investment tool like micro-investing apps. Number 2, to become comfortable with investing on a regular basis, you can learn, like we just mentioned, but you can also start with small amounts. If you start with small amounts that you're okay with losing, even though you're probably not going to lose it, that's going to help you ease into it. And number 3, if money is too tight to invest right now and to automate investing, then cash flow is your friend. I've talked about it earlier in the video, but knowing your financial picture and your inflows and outflows is gonna give you that information you need to know what your next step is. Are you ready to start investing, or do you need to free up more cash flow? Now, for those of you who are ready to start with automated investing, you're gonna wanna pick your method. For example, if you use a robo-advisor, you would set up an account and there should be a means to set up a recurring transfer. So you can do this on the day you get paid and set up a recurring transfer for the same day you get a paycheck, or you can figure out some other regular automated investment amount. All right, now on to the bonus tip. How did I save $10,000 in my emergency fund in less than a year? So going back to the first item on the list, I used the concept of automated savings, or paying myself first. What I did was I opened a high yield savings account just for this purpose. I added a direct deposit at my employer to put $100 per paycheck directly into this account. It did feel like a stretch when I started doing it, but within no time, I stopped noticing that that $100 per paycheck was gone. So as I started to realize that I could live on this amount, this net amount on my paycheck, and put money aside automatically, I started to increase that amount till eventually I was contributing $300 per paycheck towards this account, my emergency savings fund. So I was getting paid bi-weekly, so that was about $600 a month directly into this emergency savings fund. So a few things here. If you do the math, and I said I was doing about $600 per month directly into this emergency savings fund, that's not going to equate to building up $10,000 in less than a year. But here's the thing. It wasn't just my bi-weekly paycheck from my job where I automated money into my savings. It was anytime money came my way. So in that particular job that I was working, I also had a bonus. In that time span, I'm pretty sure I had a tax refund. So anytime money came my way, there was an automation that put some money directly into that emergency savings fund. So if you only have one source of income and your income is relatively low, the concept is the same. It's just the amount that's different. But what you want to do is to just start with a small amount that you're going to stop noticing is gone. And then anytime you feel like you can increase it, increase it. Anytime you get paid more, or maybe you have a second source of income, you can increase it a lot more. So in conclusion, I really believe in paying yourself first, and the trick is to bump it up. When you start to realize you can live on a set amount and the money that's out of sight, out of mind doesn't even occur to you, then increase it. All right, I hope that was helpful. Until next time, peace out.